Okay, so today we're going to be focusing on an example, and it's important to make it very clear that this is not an ad. We're not trying to promote any one brand or organization. And the purpose of this example is, and make it very clear, this is not a solicitation or an offer to buy or sell anything. The purpose here is for education, and specifically when it comes to, let's say, whole life insurance, and you want to try to understand how the expense, how the cost for a specific type of whole life insurance may change depending on the age, the weight, or pre-existing conditions. So we're just going to kind of go into an example of that. And important to give you a little background on us. We are Select Burial Insurance, so we're not involved with one specific company, even though today we're going to be using one specific company as an example, but we use dozens of companies in our repertoire, and it all comes down to what is going to help the individual applicant accomplish their goal, right? So, and let's get into this. Okay, so today we're going to be focusing on a specific product, not to go into any reason why we chose this. Just Mutual of Omaha has a product that we're specifically talking about whole life insurance, but more specifically talking about their final expense. Some people call it burial insurance, funeral insurance, and they label this product the Living Promise Whole Life Insurance product. And this is their brochure. Just wanted to go through this just a moment, kind of just to show you this. And this is the Mutual of Omaha website, and one can apply for $2,000 up to $25,000. There are different types of whole life policies that one can get, even up to, I think, 35 or 40,000. I know for sure 35. I believe there's a 40, but I'm not sure. Okay, let's go into our example. Okay, so the situation that we're looking at, okay, let me just move myself over here. The situation that we're looking at is a male who lives in the state of Alabama. I happen to be licensed in Alabama, but that's not why I picked that. And the individual is 5 feet 5 inches tall. The individual weighs 180 pounds. And as of a specific date, being 11/19/2020, if these types of individuals, as you see in column A and B, if these types of individuals applied at this age for a specific amount, right? We're not looking at 100,000 or millions of dollars. We're looking at funeral cost amounts. So individuals get 10, they get 20, they get 30,000. People don't usually get over 40,000 for this specific need. And we're going to go into this individual's profile. Again, it would be different if it was a female, if the individual may have weighed a different amount, or if they were a different height, or et cetera, or if they were a different age. So we're looking, we're not going to go through each one in specific, but let's say if we looked at an individual who was 60 years old, right, down here, row 15, and this individual is a non-smoker. Okay, so this individual is looking to apply for $10,000 of whole life policy. Now, these policies that we're going to be discussing initially are, once they're approved, they are in force on both sides of the insurance spectrum when it comes to these types of policies, for accidental as well as for natural causes. Not going to address what the difference is here, but so this individual is 60 years old, and without any medications, if this individual did an application, Just so you know, a typical application that we do may take about 15 minutes. If we do it on their portal, we'll take about 15 minutes. If we email it to you, the back and forth may add another 5 minutes. But if we do it on the portal, we get an immediate decision, like literally immediate decision. And we can get that, same day coverage. Okay, so without any meds, with this type of profile, right? Now, we're looking at something very specific, right? So if the individual was on no meds, but they had surgery, yesterday, brain surgery, which isn't one of the examples, this would negate this number, right? So, assuming everything else on the medical health side of things was clear, this individual would be able to get a $10,000 policy as a non-smoker for $43 and change a month, okay? And as long as they paid that, the policy amount would never go up and the amount of coverage would never go down. There's some companies who kind of play those types of games to show favor in your eyes initially. Okay, now, if the individual had, and again, we can't cover every medication, but I wanted to give you a specific example. If this same individual at age 60, a non-smoker, was looking for $10,000 and they were on cholesterol medication, and the cholesterol medication is, this is row 5. This is the medications. Okay. That wouldn't change what this individual would need to pay. Still be the same $43. And if you look up the entire column, whether age 50, age 60, that the amount changes based on age and whether you're a smoker or non-smoker, but it wouldn't change because of this medication. So now let's go to column E. Okay, so in column E, we have an individual who is on that same cholesterol medication, but now we added high blood pressure. Okay, now they do try, when they ask you these questions, there are different ways to gauge this, and that's part of why there's an MIB, and there's a separate video that I can connect to here that you could look at in the description if you wanted to see our whole explanation on what the MIB is. But that's how the insurance companies figure out where you are risk-wise regarding your medical history. So same $43.76 in our example with our $10,000 policy, age 60 non-smoker. And if you look up and down the column, nothing changed. So this individual has cholesterol, has blood pressure. Now, in this specific article that we made this video for, which has to do with individuals who are diabetics, so this individual now has, in column F, has high cholesterol, high blood pressure, and is a diabetic on oral meds. So they're not taking insulin shots. They're on oral meds. Nothing changed, okay? Column G. This individual would be involved with having high cholesterol, high blood pressure, and they're diabetic with insulin. Now, there are some companies, just to be clear, this specific company for this age was fine, but there are some companies that ask, did the insulin on the application, did the insulin start? I don't know, I'm going like this because you could put insulin anywhere. Did the intake of insulin begin prior to age 50, prior to age 40, prior to age 25? And some will not be able to offer you a policy or shift the policy from immediate 100% coverage to something called graded that we're going to get to in just a moment. So you see here, this individual is on insulin and is a diabetic, high blood pressure, high cholesterol, and the amount that this individual had to pay, whether they were 50 or 60, smoker or non-smoker, or the amount doesn't change. Now we're crossing to another line. Now, again, we can't give every possible example, but in the example with high blood pressure, cholesterol, a diabetic on insulin, and they have what they call mild COPD, this individual would if you look at our example, would go from paying, $43 and change to $53 and change. However, the type of policy changed. So there's a bump up because of the COPD, and that would now become $10 more, plus the policy would have a 2-year waiting period. So if this individual that got this policy at age 60 got into a car accident after the policy was approved, got into a car accident the very next day, the policy would pay out $10,000. But if they were to die from a complication or natural causes, but not complication, if they would die from natural causes, and I'm not doing this. I'm doing this a disservice because I'm not going into the details here, because we have a separate article and different video regarding the difference between graded and not graded. But this would become a graded policy, so it changed. Okay, the type of insurance that this individual is now going to get, and you could see that up and down the column anywhere in H. So whether the individual is 50, a smoker, non-smoker, the amount changed. Okay, and the type of policy changed. Now, let's go to another example. So we have cholesterol here, we have high blood pressure, diabetes with insulin, starting after the age of 50. That's our example here. And the individual also has a history of a blood clot. Okay, so amount went up to $53.98. It's a graded policy still. Now, the individual had a heart attack, history of a heart attack, still insurable, $53 for our example, $53, and it is now a graded policy. But now you add one. I wanted to give you an example of something else. If you look at cholesterol, high blood pressure, diabetes with insulin, and the individual had cancer within the past 24 months, they would not be able to get this policy, any of these policies that we've identified with Mutual of Omaha. Now, there are other companies that you can get a policy with, and we do have access to that. We have, over 300 different plans, but that's not about me. This is about just you understanding that there are options. That is the way that somebody's history and can impact the price that they would need to pay and the type of policy. So kind of tried to give you a range of from no meds to different types of meds to meds that are layered on, to give you an idea of how that can impact price. Of course, depending on your specific type of situation and the day that you do this application and whatever medical history you have and what type of agent that you're working with, you will have to look at the snapshot at that moment, that day. But just understand that there are many moving parts that put together what this policy is going to, what the premium is going to cost. If you have any questions, always ask us at ask@selectburialinsurance.com.